If you don't pay the private lender, the property does. What does that mean? What that means is if you don't hold up your end of the bargain, you're giving them a mortgage or deed of trust, then guess what? If you don't pay them, they get the property. Now, they don't want the property. That's why they are a passive private lender investor. They don't want to have to deal with the property. But nonetheless, if you don't pay them, they get the property. And we keep a 25% equity cushion to protect them. We don't borrow more than 75% of the after repaired value, which means they're going to be protected. If it's a $200,000 after repaired value house, we're not going to borrow more than $150,000. Now, I'll buy that house all day long for $100,000 if it needs maybe $30,000 in renovations. But again, they are protected. Your credit is never pulled.
You've answered so many of the questions that I know that people are interested in. You don't need credit. You don't need a license. So now I just need to know where to find these private lenders, Jay. We don't have phone books anymore. Do I need to Google these private lenders? How can I find these private lenders?
So there are three categories of where you find private lenders. The first category is what I call your warm market. These are people you already know. They're in your cell phone. You go to church with them. You're in the Rotary Club with them. You play golf with them. It's the people on a regular basis throughout your daily life. That's your warm market, okay? I call it relationship capital is what that is. The second category of where private lenders are, and by the way, those people in your warm market, they never heard of this world. That's why you got to put on your teacher hat, teach them about it. Second category of private lenders is what I call your expanded warm market. Because if you want to scale your business, sooner or later, you're going to run out of your list. You're going to run out of your connections sooner or later. So the expanded warm market is how do you grow your network of relationships and connections? And of course, we all know there's a direct correlation between your network and your net worth, right? And so I'll give you one tip right now. One of the fastest ways to grow your connections is join your local BNI, which stands for Business Networking International. My lands, even little Morehead City, North Carolina, population 8,000 people where we live, started up a BNI, for goodness sakes, 15 years ago. With BNI, the purpose of that organization in your local chapter is all your other fellow members are selling you, are talking about you. And there truly is only one attorney, one realtor, one general contractor, one plumber, one electrician, one HVAC, one essential oil sales lady, if you know what I'm getting at. And so when you join BNI as the real estate investor, you're the only real estate investor in that group. And so you teach your fellow members about private money and who do you want to get in front of? You want to get in front of folks that are looking for high rates of return safely and securely. The third category of where you find private lenders are existing private lenders. They are individuals that are already loaning money out, already investing money with real estate investors. The challenge with that, though, is you're not going to put on your teacher hat. They already know what private money is. They're already lending money out, which means they might not be happy with your 8%. So now it's a negotiation conversation. And I don't want a negotiation conversation. I'd rather teach people what it is. But where do you find existing private lenders? I'll tell you a great place to find them. And that is at self-directed IRA networking events. So what in the world is a self-directed IRA company? That's a company that's been approved by the IRS to where an individual can take current retirement funds that are maybe in a 401k or a previous employer's 401k, or maybe they have an annuity, or maybe they've got dedicated retirement funds that are tax deferred and they got it invested in the stock market, any kind of dedicated retirement funds. They can move those retirement funds over to the approved self-directed IRA company. No tax penalties, no tax effect. They move that money over, takes maybe a couple of weeks to fund their account. Now they can loan that money out. They can invest their retirement funds. That's why it's called a self-directed IRA company. They truly self-direct those retirement funds, and now they can be a private lender with their retirement funds. And now all the interest that they earn into their account is either tax deferred until they take distributions, or it's tax free if they're using a Roth IRA, which means taxes have already been paid. And now all the profits, all the interest earned is now tax free.